Hello, welcome to another episode of the Ick and Billy's Weekly Forecast Show. Our weekly forecast is published every Sunday, 4 p.m. UK time, to help you navigate the sea of market volatility. Please subscribe and click the like button before we dive into the chart.
Hey people, I've got something good to share with you guys. EconBilis has launched a prop trading service and we are now looking for talented traders to fund. You can trade Forex, crypto indices, and metals with the accounts using the MetaTrader 4 application. We have the friendliest evaluation criteria in the industry that sets you up for success. All you just need to make 10% on your account in 60 days and make sure that your trade sizes are consistent and within a reasonable risk parameter. Most prop trading firms split up their evaluation into two 30-day phases and require a 10% profit made on each of those phases. In my opinion, that sets up traders for failure and forces them to take unnecessary risks on the account. Furthermore, we allow you to earn from the get-go. Yes, we reward you for good trading even during your evaluation phase. So wait no longer. Go ahead and sign up for an account at econbilis.capital. We're now giving out free challenges for a limited time only. Please join our Discord channel to say hi and find out more.
Now next, let's talk about the DXY. So for the DXY is traded against a basket of dollar pairs, and we can see that the price has started to move down. This is actually due to the other countries' reaction to inflation and the Fed's raising of rates. And with that, what is happening is that as they raise rates, it is more attractive for investors to put money in that particular country to earn yield of their capital, right? And as the US announces an interest rate hike due to the expectation that there will be higher yield by putting money in the US, money flows out from these economies to the US, and when they do that, they have to buy the dollar, which drives up the price of the dollar. And now that the other countries are reacting by raising their own rates, what is happening is that the movement of money or the expectation is moving the other way, which is for US dollar to be converted into other currencies to earn yield in that particular country's currency. So I think whatever happens for the rest of the year, it will be very largely dependent on how the other countries play catch up to the Fed's raising of interest rates. If they are on it, then I think it will be a fairly choppy movement. Price wouldn't move much. But if they are on it, I think we will actually see a downward move of the DXY, right? So yeah, but bear in mind, this is an uptrend, right? We don't fight the uptrend. We are in the middle of a channel and it is closer to the top of the channel to test here than it is here, right? So there is certainty in the Federal Reserve raising rates 6 more times this year. So by the end of their rate hike program, the interest rates will be between 1.75 to 2, right? So you take the in between of that will be about 1.9, which is higher than the other countries, what the other countries is offering right now. So definitely, I think I favor the upside unless the other countries react strongly and price starts to move down. So yeah, keep a lookout for this pair.
We've come to the end of the video. If you think our content is useful to you, please like, share, and subscribe. Our Discord channel is up and running, and it's the best place to stay current with our latest updates. See you there, or until next week.